Ladies and gentlemen, welcome to Growth Stock Research. In a recent press release, the Public Investment Fund, PIF for short, from Saudi Arabia, which is the majority shareholder of Lucid, announced that it will invest at least $40 billion every single year, coming 5 years into its portfolio companies. One of the 13 sectors is the automotive sector. And while a full disclosure of all companies in which PIF is invested in is not available, we know that they sold their shares of Tesla and instead shifted their focus to Lucid. We therefore assume that Lucid is playing a key role in their investment strategy and long-term goals. This video is structured in the following way. Number 1, background of the Public Investment Fund. Number 2, two major incidents. Number 3, long-term partnership. And number 4, Lucid's second factory. Who pays for it? Of course, it is not a secret that Saudi Arabia became wealthy because of its oil reserves and that they're still heavily dependent on oil. More importantly, it is also not a secret that this oil dependency is not sustainable. We believe that in the coming years, stricter policies will put oil companies at a disadvantage. Also, while Saudi Arabia and its national oil company Aramco is rather secretive about its true capacity, many experts doubt that Saudi Arabia has that much oil left. Oil economist Dr. Salameh believes that Saudi Arabia has up to 74 billion barrels of oil remaining. With a yearly output of 3.5 billion barrels, Saudi Arabia would have approximately 20 years to transform its economy. This is not an easy task by itself, and in Saudi Arabia's case, it's not just the economy but also the society that needs to change. Yet, it is possible, as we can see with Dubai, that transformed itself in recent decades. Oil production, which once accounted for 50% of Dubai's gross domestic product, contributes less than 1% of GDP today. To achieve this feat with Saudi Arabia, far greater capital and a clear strategy are necessary. In order to gain the necessary capital, national oil company Aramco went public over a year ago, and its proceeds were used to fund the Public Investment Fund. This fund already has existed for almost 50 years but only received more attention in recent years, as it is a major driving force behind Saudi Arabia's transformation as it became one of the biggest wealth funds in the world. This is also exemplified by its rapid growth in terms of employees, which 5 years ago consisted of only 40 employees and is now well above 1,000. Noteworthy, 1 out of 4 employees is a woman. As for the strategy, Saudi Arabia has the vision to transform itself by 2030, which is in less than 9 years, and to be also more open to foreigners. One major project is NEOM, which is a planned city with its own more liberal laws next to the Red Sea, and it could be seen in its vision as a mix of Singapore and Dubai. This now gets to our next point. 35-year-old Mohammed bin Salman, future king of Saudi Arabia, has taken the lead role. 2 major incidents gained a lot of media attention. For one, he used questionable methods to take on corruption by imprisoning up to 500 wealthy Saudis in the luxury hotel Ritz-Carlton back in 2017, and only released them after over $100 billion was paid back to the Saudi government. The second major incident linked to him was the infamous murder of the journalist Khashoggi, marking not only negative publicity for Saudi Arabia, but also jeopardizing Saudi Arabia's transformation. If one can take anything positive out of this horrible deed, it would probably be to hope that Saudi leadership deeply regrets this major wrongdoing and will not commit any such deeds in the future. So overall, we can see that Saudi Arabia has the potential to transform itself, but it's not guaranteed. Major challenges await and mistakes along the way can happen. Linking this all back to EVs, another mistake by PIF was selling all of its Tesla shares in 2020, shortly before the stock of Tesla had a stellar rally. Before exiting, the Public Investment Fund originally owned almost 5% of Tesla. It was the plan's sole investor behind the infamous funding secure tweet by Elon Musk to take Tesla private, as later explained by Musk himself. However, the PIF later changed direction sold its Tesla shares and instead focused on Lucid, as they had bought a 67 majority share of the company for $1.3 billion back in 2018. Most likely, a major reason to shift its focus from Tesla to Lucid was the possibility to meaningfully influence and control Lucid's long-term strategy and direction. Lucid CEO Rawlinson also emphasized that PIF is more than just a financial partner.
Yeah. Costs a lot of money to do that. We had Yasser Al-Rumayyan on from the PIF last week discussing, of course, in part their investment, one of your significant holders. Do you have access to capital that you need in order to actually pull off all those phases?
We do indeed. And the Public Investment Fund of Saudi Arabia have been great strategic partners. This is much more than a financial arrangement. This is a long-term strategic partnership. You're absolutely right. This is a capital-intensive business.
From the investors' presentation, we know that neither the Public Investment Fund nor other institutional investors have sold any shares to Churchill Capital, as all of its proceeds amounting to over $4.4 billion went directly to Lucid's cash position, $2.07 billion coming from CCIV and $2.5 billion coming from PIPE investors. Ultimately, it seems that to make room for CCIV shareholders with 16.1% and PIPE investors with 10.4%, all Lucid investors decreased their position to create this room. Of course, this is more complicated than that, as we don't account for the step in between referring to the bridge financing, but effectively all previous Lucid investor stakes decreased, just like the Public Investment Fund's stake decreased from originally 67% to 62%. According to the S4 filing, there are roughly 30 million shares that were bought by IR, an affiliate to the Public Investment Fund. That equates to roughly $200 million. 200 million of the 24 billion valuation for PIPE investors equals to 0.83%. The Public Investment Fund will own 62.83% after the merger with CCIV and invested in total over $1.5 billion in Lucid in the last 3 years. This 200 million PIPE investment from the Public Investment Fund was not necessary, and if they were doubtful about Lucid's future prospects, they would not have invested more into Lucid. Another clue that shows the high commitment from the Public Investment Fund can be found in the filing, where it is stated that from 2019 to 2020, the Public Investment Fund financed a talent development program with over $700,000 to train young Saudis at Lucid's US location, basically taking care of all costs. So, linking this all back together to how Saudi Arabia is heavily investing into its transformation, it makes sense that the Public Investment Fund is interested in establishing an EV factory in Saudi Arabia. In recent articles, there was a tendency to see this as an unwanted commitment for Lucid, which is likely to incur high, unnecessary costs for them. However, we don't see this as a negative. As Bloomberg reported earlier this year, the Public Investment Fund would take care of all the related costs building the plant. This is also in line with the talent development program, which the Public Investment Fund fully covered, and let's not forget the yearly $40 billion which Saudi Arabia plans to invest every single year in the coming 5 years. For reference, a factory could cost $1 to $3 billion depending on the size. So, if $40 billion spending per year are planned, then even large-scale Lucid factory in Saudi Arabia could be easily covered. And most importantly, to quote the recent S4 filing, in the 2018 Series D agreements, Lucid and IR, which is an affiliate of the Public Investment Fund, agreed to establish partnership for development, manufacturing, distribution, and service capabilities in respect of Lucid's products and services in certain regions, and to negotiate in good faith a business plan, including the work required to eventually create a full production facility in the Kingdom of Saudi Arabia. In December 2020, Lucid's board of directors, with the support of IR, decided to instead pursue a strategy that contemplates global sales and distribution and eventual phase manufacturing of Lucid vehicles and other products in Asia Pacific, the Middle East, and potentially Europe through wholly owned subsidiaries of Lucid. In connection with this decision, Lucid has satisfied its applicable obligations under the 2018 Series D agreements. If you read this carefully, this does not mean that Lucid must by all means establish a second factory in Saudi Arabia in a certain time frame, which recent articles seem to point out to. It means that there's clearly an intention to build a second factory, but it will be done when it makes sense. Noteworthy, the Asia Pacific region as a site for future Lucid second factory is now also mentioned before the Middle East, so it could mean that Lucid should first focus on the Chinese market before establishing a factory in Saudi Arabia. And in talking about China, you remember how NIO got bailed out by the Chinese government with $1.4 billion when it was struggling? And what was the main reason? China realized the importance of EVs and is heavily committed to become a big EV player in the world. The same could hold true for the relationship between Lucid and Saudi Arabia. So overall, the key message is that the $400 billion public investment fund is highly invested and committed to Lucid. Of course, there are challenges ahead, but if anything, it seems likely that Lucid will keep getting support from the public investment fund. Why? Because Saudi Arabia realized the worldwide potential of EVs in the automotive sector and needs to urgently transform its oil-based economy. What do you think about the partnership between Lucid and the public investment fund? We will reply to every single comment and are planning to make further videos on Lucid. By the way, if you like our research approach with a long-term focus and analysis of the company, please consider sharing this video to other Lucid investors. Vielen Dank.